Hi, it's Larry Gaines, Paracycle Trading, and it's Tuesday evening, March the 5th. And the big question is, should you be jumping on this market freight train? So what I'm going to present to you tonight is just kind of dissect everything and put out all the information and kind of show you what the markets are looking like. And this will give you a better chance or idea of what to do in this kind of market environment. So first off, let's look to see what the Dow Jones, which I'm sure you've heard is make a new high, all-time high. So we're up here, and you can see the last time we were up at this area was in 2007. We're not currently major overbought here. You can see the RSI is not as extended as it was in 2007. So not overbought. We have a fantastic macro trend up, and then areas of support will be right here at 136.80 or 13,681. Now let's pull up the daily and look at the volume. Now you can see on this move up we've had the volume has actually peaked above the average volume right here. This was just a slow grind up, and now we've peaked up. We're above the average volume, but it's been tailing off. On each move higher, this volume has gotten lower. So there's a lot of uncertainty hanging over the market. Now, risk reward jumping in here right now is a little bit higher risk. You should see more of a consolidation pattern back to this 1400 level. So, if you jump in here now, you basically miss the big meat of the move from 1400 to 14,200. So unless you're a specific stock picker, you see something that's a very good cycle low type of trade, or I think it's more of a trader's market now, and then you wait for a pullback. But let's go through the rest of the markets. Now here's a look at the S&P 500 cash. Now you can see we had this push to the upside. We broke above the high that it's been trying to push, and so this is a technical move higher. A lot of this was pushed by end of the day trading systems, but the key point here is look how extended price is from the moving average. So what tends to happen is price either comes down, or you have price go sideways and you let the moving average catch up to price. So you can see here when we've got it overextended in, right here back in September the 14th, we got it overextended here, went one more day up, and then it pulled back to the moving average. Now this is about a 1.6, 1.7% extension from this 8 EMA. And right today, that's about a 1.5 extension. So you could see it go a little higher tomorrow, and then I expect it to pull back into this moving average, letting the moving average either catch up to price or price come to the moving average. Because you can't extend too far from moving averages because eventually they'll revert back to the moving average. So that's just how it works. So when you have these extensions like this, you don't want to chase the market. You wait, let it pull back to the moving average, and then that's your entry point if you want. Now here's the same situation for the NASDAQ 100. Now our systems all went long yesterday on this momentum up, and today, let's see where they are. They're still holding long, but you can see we've broken through the 786 right here. This is from the high back in October to the low in November, and so we've broken back through this high 786, a very powerful move up, and now we're also through this extension from the high back here, which came in the 19th of December to the low of in the 31st of December. We had that big pullback, and then this is a Fibonacci extension up to the 618 right here. So we went through that today, pulled back into it. So you're also overextended from the 8 moving average, just like we were on the S&P. So you should get a reversion back here, or at least have the price go sideways here, let the moving average catch up. So you don't want to chase the market right in this kind of zone here because of the moving average situation and overextension of that. Now again, keys to the market will be the U.S. bonds, which you can see have gone sideways. They haven't totally rolled over, but if they start breaking down lower through this 143, 1330 seconds, this is what will influence the equities to take that next leg up. So keep an eye on the bonds. Now they could pull back to right in here, about 142.30, which we're very close to, and then see if there's a consolidation or see if there's a real hard drop and the downtrend continues. So we had broken out of this downtrend and now it's gone sideways. So if the bonds roll over, watch out for the equities. But if the bonds hang in here and start pushing higher, then that will also put heat on the equities to the downside. Now here's the Japanese yen, and you can see we bottomed here on the yen. So if the yen starts making a move higher, then this will also have an effect on the currency situation, which will push the euro lower, the dollar higher. Now the other thing to consider, this right now we're currently in a volatility squeeze as well. You can see it's going sideways. So right now the key is, okay, will it break to the upside or will it break to the downside on the volatility squeeze? There's got to be a lot of shorts in the yen, so there's a potential that it could break to the upside. And we've got our current model currently now is long, so keep an eye on the yen. So if it starts breaking the upside, perhaps on short covering, gets back up here, that'll influence the markets, and that'll have an influence, a negative influence on the euro. And here's the euro. You can see it's been in this hard downtrend, and now it's turning up a little bit. There's going to be the ECB's meeting, I think, Thursday, so there could be a reduction in their interest rates, which might already be built into the price. But as interest rates go down in Europe, that creates less demand for their currency, and that will push euro lower. But euro right now has come into some support, so that's another factor that's helping to drive the equities up. Because euro goes up, then the dollar goes down. Here's the dollar. Now here's the dollar index, and you can see here from the high back in August to the low back in October, we put our Fibonacci extensions in here. We came right up to the 618, consolidated for about a week, broke the 618. Now the key here is to see if it holds the 618 and consolidates. Now if the dollar holds up here and consolidates and moves higher, then that's going to have a negative impact on the equities, on commodities, on basic materials. So key component here is to watch the dollar. So keep an eye on the dollar right there at the 618. It's trying to hold. If it holds here and consolidates, then that'll have an effect on the equities to the downside. If it rolls over here and starts a hard fall down, you'll see equities explode to the upside. Now here's Apple. Apple got a little bit of a bounce today, came back into this 435 level and couldn't get through it. There's a lot of overhead supply here, a lot of gap areas. So Apple needs to get through here. Now if Apple starts getting some momentum back to the upside, which I'm not sure if it will, you're going to have a lot of selling because there's a lot of trapped length here. So it's going to have a hard time going. But it's right into resistance here, so see if it gets through 435. Here's Google. Now Google's on a major tear to the upside, but again it's going to be extended over its moving averages. Let's take a look at that. Now this is way overextended. Now this is even showing, as strong as Google is, this is getting ready to be a major problem. When it turns over, there's going to be some good liquidation, so it might be a short setup, defined risk short setup. It's not there yet, but this is something I'm going to keep an eye on because look how overextended it is from the moving averages. So either it's going to have to start going sideways, hold this gap at 829, needs to hold that gap, consolidate sideways, let the moving average come back up to it, or it's going to roll over, fill the gap, and then get down closer to that moving average around 810. So from what I'm seeing, the overextensions from the moving averages, you do not want to chase this market. There'll be other opportunities. The risk reward is definitely not on side of the chasing it right now. There's more risk to a pullback than there is to missing the train as it leaves the station. So good luck trading tomorrow, and I'll talk to you on the close. Now, don't miss out on my boot camp. I'm having this on weekly options this Saturday, March the 9th. It's going to be a full day event just to teach you how to use weekly options for your trading, for anywhere from day trading, swing trading, expiration trades. You're going to learn a lot. So if you'd like to join us for that, just go to powercycletrading.com/bootcamp-camp for weekly options, and this will also be on the email here that you'll receive today with this video. So good luck trading tomorrow, and I'll talk to everybody at Aftermarket Power Outlook on the close.